Hej allihopa och välkommen till Pengaflödet-podcasten. Mitt namn är Emily.
Och mitt namn är Anna.
Vi håller på med fastighetsinvesteringar i Storbritannien. Och den här podden kommer handla om just detta och vi kommer varje vecka ta upp relevanta ämnen och intervjua personer som vi finner inspirerande.
Hej och välkomna till Pengaflödet-podcasten. Today we have Shaz. How is this, Shaz?
Very good, thank you, Nana. How are you?
I'm good. How's UK?
UK is very nice. It's been pretty decent weather, which is good. So yeah, everything's okay, considering obviously we have a global pandemic. So apart from those obvious challenges, things are very good. And yourself?
Yeah, it's good. It's in Sweden. Everything nothing have changed basically since the pandemic happened. So nothing here. I know that they released for you guys to go out for the open, but in Sweden we never had any lockdown here.
Okay, so you're staying. You're in lockdown, are you?
No lockdown here.
No lockdown. Okay, fine.
So I thought this episode will be very interesting because a lot of our listeners are people that invest in UK from Sweden would appreciate this because you're a accountant plus a tax specialist, right?
That's right, yes.
So maybe you could introduce yourself.
Okay, so I always find that interesting and challenging because there's so many different things that I do. I always struggle to keep it brief, but get to the point. So I'm a chartered accountant by profession. I have my own accountancy firm. Alongside the accountancy firm, I run 4 other businesses, ranging from a children's day nursery all the way up to being a property developer, working on quite a few different property developments. I just finished off converting 21 flats and also 5 2-bedroom flats. We're now working on converting a commercial building into 12 flats, 6 1-bedroom and 6 2-bedroom. After that, I've got 2 other developments in the pipeline, which we're buying. So we're just going through the full planning stage. One of them is up to 40 houses. So that's some of the stuff that I do in business. And we specialize in working with property investors and property developers. I've written a tax book. I've written a few other books. Reasonably busy on social media, on Facebook, Twitter, YouTube, Instagram, LinkedIn, sharing information, knowledge, experience, expertise. So that's in a nutshell, and as quickly as I could do it, my introduction, if that helps, Nana.
Yeah, that's a really big portfolio or deals that you have going on. So
yeah, just I guess I find it interesting, you see, and because I mean that business in terms of helping property investors, helping property developers, I've always had a keen interest. So I don't think there's any better way, in my opinion, and others might disagree, to be an advisor, but at the same time to also be on that journey. I think that creates a lot of affinity. You get to understand other people's journeys, their struggles, their challenges, their opportunities, how they think, the kind of blocks they come across, and the things that I learn on my journey as a property investor. My clients find that the most interesting and the most useful, which is really good.
Yeah, that is really good because, I mean, as an investor, you really would like to have a tax and accountant that understand investment or do investments as themselves, so you can discuss it with them.
Yeah, absolutely, and that helps a lot. So that's a secondary benefit. The main is I love property and I love all things related to property, and that's what I've taken a keen interest in property developers, investors, but also in being a property investor myself.
As an investor, should we get a bookkeeper?
Yes, I mean it depends. If you're saying should we get a in-house to look after our affairs, or do we need a bookkeeper full stop? You do need a bookkeeper because somebody needs to help manage your numbers and your compliance. So if you're starting off new and you've got more time on your hands and not much money coming in, then it makes sense to perhaps start it off yourself, or at least do the basics. I mean, the real basics. But if you have enough income, and the quicker you get to this stage, the better. If you have enough income to then employ a bookkeeper, that's fantastic. What most people usually do is they use their accountant to do the bookkeeping, because not only is that cost effective, it's also simpler, it's quicker, and the accountant usually knows how things work. So they're able to assist and support you. And they have, most accountancy firms, small and large, have in-house bookkeepers. So that makes it easier. And once you get to a really large scale, where you need somebody full-time to do your books, or even part-time, then it makes sense to possibly take on a bookkeeper in-house. So you always need a bookkeeper, but the way that you take them on will be different depending on the size of your business.
Yeah, definitely. So which bookkeeping program should we as investors use?
They're all pretty good. So nowadays, cloud accounting or cloud computing is very popular. So you've got Xero, you've got QuickBooks, you've got Free Agent. There's some others out there whose names will escape my mind. I think Iris have got cash flow, but the two main ones are Xero and QuickBooks, and they seem to work very well. So we work with both of those. We use Xero more than QuickBooks because we started with Xero, but most of our clients are on Xero. Some of them use QuickBooks. So those are the two main ones that I would say I come across more often than not.
So let's say if a client find a program that they want to use, would you learn that new program or that software, or would you say you really need to, we only work with Xero or QuickBooks?
So if a client says they have got their own bookkeeper, or they're doing their bookkeeping, and they'll give us the trial balance to work with, we'll work with their software, no problem whatsoever. If they wanted us to do the bookkeeping, then we would usually say use the software we're using, because obviously the firm that's doing the bookkeeping is the one that's using the software. So you're better off using their recommended software, because that's going to work out better, because by the time we train up ourselves to learn that piece of software, and if it isn't that popular and not many of the people out there are using it, and we're not going to get many clients using it, it's not the best use of our clients' money. So more often than not, those who use us for bookkeeping, 9 out of 10 times will say to us, use the software you want. And if they don't, they're usually on QuickBooks, Sage, or on Xero. So it works fine, okay, as well. And those who are on Sage, if they're not on the cloud, we'll then help them move up into the cloud.
Yeah. And this doesn't change if you're remote, right? It doesn't matter if you're remote or if you live in the UK.
Yeah, absolutely. That's the beauty with this, because it's all up in the cloud. You can access it wherever you like. So nobody now has to come into our office to give us any information or records. Basically, they can just scan everything, because up in the cloud, we do the rest. Really, really simple and easy in terms of getting information over to us. Whereas in the old days, let's go back 10 years and beyond, if somebody didn't have a computerized system and they wanted to use us as their accountant, and we had quite a few of those clients, or we had a number of them anyhow, they used to post their information over to us, and it then used to come to us physically, and then we used to process it. Now, that's a thing of the past. So our clients are all over the UK.
That's nice. So basically, I bet you don't miss the old times.
No, you do and you don't, because the old times sometimes are the best times, if that kind of makes sense, when you look back and you reflect, because you kind of look at your journey and see how you've progressed and how you've come on, and some of the challenges you've had and some of the nice people you've met. So all of those things are good. But in terms of a purely transformation and making progress and moving on with the times, you're absolutely right. Accountancy now is very different to when it was when I started many years ago. and I think it's in a much better place now, and the direction it's taking, it's a lot better because clients now have information at their fingertips, and they can go into Xero, QuickBooks, whichever platform or whichever software, and they can have a look at their numbers, see their income, see their expenditure, see all their different profit margins, see what's going on, and then start tracking and saying, oh, if I have one more property, or if I sell a bit more, what's going to happen to my numbers? So you start having that interesting conversation about how you can improve your business. So that's really good.
Yeah, that's good. So what questions should you ask your accountant to see if they understand property?
There's quite a few different types of questions you can ask. I mean, the most common one I would say would be the common ones. The first one I would always ask is to find out if they invest in property. If they do, that's usually a big tick in the box, because then they know how the particular sector works. Now, of course, it's not important that every accountant should work in the sector. There's accountants who specialize in working with dentists, but they're not dentists. There's accountants who specialize in working with doctors. They're not doctors. You don't have to be in that sector. But with property, because it's different to being a dentist or a doctor, that's a big tick in the box if they do. The second question I would ask them is, how many other property investors are you looking after right now? And if it's a substantial number or a significant number, and you think, okay, well, that's good. The third question linked with that is, can you share some stories with me where you've helped a property investor either in a similar situation to me or in a different situation, but you've done something remarkable for them, which you're really proud of, and it's made a huge difference to the client's life and their business. The fourth one I would do is say, can you now show me some case studies, not just a story, case studies of some tangible differences you've made? The sixth one I would always endorse to say, can you give me 2 or 3 names of clients who I can speak to hear from them what they think of the experience they've had with you? Because, every business owner is likely to be biased and say they do a good job, and most obviously try their best and they do a good job. But the proof in the pudding is what do their clients or their customers say about them? That's the real powerful thing. Those are some of the questions I would ask initially to find out if the accountant is right. And then I'd even, if somebody has a particular scenario, share the scenario and say, can you show me how you've dealt with this before? Or can you tell me how you would go about dealing with this? And you don't want them to tell you everything, because that would take too long, but to give you enough, to give you confidence that yes, this person can deal with this particular challenge.
Yeah, good answer. So should we as overseas investors use limited company, or should we invest privately?
You mean when you're in the UK?
Yes.
I think the company route's going to be better. Again, it depends on people's personal situation and their own scenario, and how much income they've got, what their end goal is, what they're looking to achieve. But generally speaking, and I'm generalizing here, and this won't work for everybody, and one size never fits all. But generally speaking, overseas investors in the UK tend to use a limited company.
Yeah. And if we have investors that invest for an annual interest rate, do we need to pay withholding tax as investors?
Do you mean as in when you give money to somebody in the UK as a loan?
No. So let's say, because this is a very big topic in the Swedish property community that invest in UK. So let's say if I got an investor from Sweden who wants to invest in another, like my project then, because I'm a property investor, and I want to give him interest on his money that he invests.
So you're saying somebody who has a company in the UK, they borrow money from somebody else. When they pay them the interest, we need to withhold the tax.
Yeah. Do we need to pay withholding tax?
Yes, that's right. Yes, yeah. And then you need to file, or you also need to file a return with HMRC.
Yes.
Yes.
Yes, you explained it very well. So, do they, if we have investors from Sweden, do they need to declare income in the UK because we have paid the withholding tax on their interest, or is it there a form where we can fill in and provide it for them to reclaim the tax?
So it depends if they're resident in the UK or not. So if they're a totally overseas investor, then the rules are different. If they're living in the UK and have been resident in the UK, then the process is different. But what usually happens is, and this doesn't just apply to Sweden, it applies to most countries with which the UK has a double tax treaty, where basically if you pay tax in the UK, Nana, then you file a return in your home country, and then in your home country, if the tax rate is higher, you only pay the balance. So let's say, for example, the tax rate in your country is 40% and the UK is 20%, for example. If you pay 20% in the UK will have a double tax treaty with Sweden. So when you file your return in Sweden as well, you'll say, I've already paid 20% in the UK, and then the Swedish authorities will say, in that case, pay us the balance. And the same happens vice versa with UK people who've got businesses or interests in Sweden.
Good explanation. So, can you extract tax-free money from your limited company into your personal account?
Again, are we talking about somebody who's living in the UK or out of the UK?
Out of the UK.
So that would depend on their overall income. So in the UK, how it usually works, Nana, is you have a personal allowance, which is your tax-free allowance, which is how much money you can earn every single year without paying any tax. So if you withdraw that amount or anything less than that, then you don't pay any tax. When you go over that amount, then you have to pay tax. And if you're a director of a company and you're an employee, the company then pays employers' national insurance. You then pay employees' national insurance, and then you also pay income tax. That's part of it. And usually for the smaller companies, which are called closed companies, the director is also the shareholder, so they own the company. And in which case they'll take some money out by way of a salary, and the rest of the money they tend to take as a dividend. And the tax rate on dividends is different than the tax rate on a salary. It's still income tax, but it's different rates. And obviously, if you're from Sweden, then depending on how much income you're making there, the amount of tax-free income you have is going to be different. So it depends on the situation. But usually, people who are in the UK will take a small salary of about 8,500, 9,000. I think this year, in fact, it's 9,500 tax-free. And then you get £2,000 tax-free dividend every year. They'll take that, and above and beyond that, any additional money they'll take as a dividend, as long as the company's made enough profit in the year or has enough in reserves to pay them a dividend.
Oh, perfect.
I hope I didn't complicate that too much.
Otherwise, they need to listen again. We get a lot of questions about this director's loans. Could you explain what it is?
Director's loan works two ways. One is a director gives money to the company. So let's run through a scenario, Nana. You start a company. You're looking to buy a property. You need to put down a deposit to get a mortgage. So you loan your company £30,000. We're talking pound sterling. So you loan money to the company. So, and then when the company has enough money, the company will repay you. Okay, that's a loan from you to the company. And when the company repays you, there's no tax to pay on that, because you've already paid tax on it at some point in the past. You had the money in your bank account, you've loaned it, so you don't pay tax when the company repays you. That's the first thing. The second thing is you can then charge interest to the company for the loan that you've given it. And if that happens, you might have to pay some income tax on the interest element, depending on your overall income. So that's one side of a director's loan. The other side is when you take money out of a company, but you've not declared it as a salary or a bonus or a dividend, which means now you owe the company money. And in the UK, we have rules around that. And if you take out money from a company, you should pay interest. If you don't pay interest, you have to file what's called a P11D, which basically means is you've had a benefit in kind. So you benefited from using the company's money, but because you haven't paid interest, the interest element is a taxable benefit. Okay, that's one side. Then the other side is if you don't repay the loan back within 10 months or 9 months of the year end, okay, and the balance is more than £10,000, you then have to pay some Section 455 tax. So you pay 32.5% tax to HMRC because you've taken the money out and you've not paid it's not declared as personal income. When you repay that money to the company, then at the end of that tax year, you can then ask HMRC to refund you through your tax return. And then if HMRC need to physically return the money to you, they'll return it to you after you filed the tax return. So that's the two angles or areas of loan accounts. One, money owed to you, which is usually the simpler one, and one is money owed by you. Money owed by you can get complicated because if you don't do the right things in the right time, for example, if you've had a benefit in kind, you've not paid interest, you've not filed a P11D, that comes with interest and penalties. Then if you haven't repaid the loan, you then have to pay the Section 455 tax. It's very complicated if people haven't come across it before, and it causes huge problems for people, huge problems.
So there is an expiration day for claiming it back, right?
Yes, there is. That's right. There is.
Yeah, and that was around 9 months, or you said, right?
Yeah, that's right. 9 months after the event.
Yeah. So which expenses can you deduct on a director's loan?
So you can, in the UK, the system is simple but very complex. Simple in the sense that the rule is you can claim any expense as long as it's wholly and exclusively for the purpose of your business. So if you can demonstrate that you incurred an expense in your business which is wholly and exclusively for the business, you can claim that as an expense. If you're a director and you paid for something for yourself linked with the business, then you have to prove it's wholly, exclusively, and necessarily. That's an extra test you have to meet. So people quite often ask me, what can I claim? Can I claim mileage? Can I claim for using my home as an office? Can I claim for travel costs? Can I claim for a mobile phone? Can I claim for stationery? Can I claim for going on a course or paying to listen to a webinar? The answer usually, for those usually without getting into the specifics, is yes, as long as it was for the business. With courses, it's slightly different, Nana, in the UK, because if you go on a course where you're acquiring a new skill, you don't have the skill before, then you can't claim it. If you go on a course where you're improving, enhancing an existing skill, which in the UK we call continuing professional development, you might call it something similar in Sweden, then you can claim for the CPD, as we call it. You can claim for that, but if it's a new skill, then you can't. So basically, you can claim everything as long as you can prove it's for the business.
So basically, let's say if I go on a course about commercial, I've been doing buy-to-lets all the time, would that fit in or it wouldn't?
That would fit in, because if you've been doing property and you've got buy-to-lets, and let's say you've got 10 buy-to-lets, and it didn't have to be 10, by the way, but let's say you've got 10 buy-to-lets and you've been doing it for 7-8 years, you understand property, you understand financing, you understand repairs, maintenance, doing refurbishments, you understand the basics. What you're now trying to do is you're just trying to improve a certain part of the skill, which is absolutely fine. But if you're fresh off the block and you've never done property before, and you go into a buy-to-let course or you go onto a commercial conversion course, then you can't claim it because you've got no existing knowledge, experience, expertise, and skill.
Okay. So what company structure should you have if you're doing different strategies? Example, flip, commercial, buy-to-let, HMO.
Again, it depends. So in the UK, the 4 popular ones are a sole trader, which is you by yourself, a partnership, which is 2 or more people, a limited liability partnership, which is 2 entities or more. So it could be 2 people, or it could be 1 person and a limited company, which is called a mixed partnership, or you could have a limited company. So it all depends on the situation and the circumstances, Nana, on what works best. So sometimes people are fixated on having a partnership. Others I've seen are very keen to always have a limited liability partnership, but the majority seem to be very keen to have a limited company. And the answer, and the most sincere answer I can give you is, it depends on the situation and the circumstances. So the skill is in trying to work out why somebody's doing a particular deal or transaction, and then see what the end result is, see what the tax is, see what the consequences are, see what they're going to do with the money, and then work out which structure is best for them. Usually developers, because they have quite a bit going on, and as you said, looking at different property strategies, they tend to favor a limited company route, because at the top they'll have a holding company, and then they've created like a group structure. They've got different SPVs. SPV stands for special purpose vehicle, which just means it's a limited company created for a particular purpose. And then they'll run their different projects through different limited companies. Once that project finished, if they then sell those properties, they then close that company, move the money up into the holding company, and push it down into the new project. But I would still say and advocate and caution people and suggest and advise and politely recommend they speak to their accountant and explore all the different structures, just to make sure they've always chosen the best one. Don't always assume limited is the best way to go, because sometimes there might be a different outcome somebody's looking for in a particular deal, and an LLP might work better, a partnership might work better, or a sole trader might work better. As long as they've fully considered all the different options and then they go for the one that their accountant or their tax advisor suggests and they're comfortable with, that's fine.
Good answer. I was thinking about maybe you could explain the new stamp duty regulation and the old one, since they will be coming back later after a year.
That is a very good question, Nana, and it's a very wide question in scope. So what I will do for you is I'll try and keep it brief, because I know you've got a few of the questions and I want to try and cover as much as I can with you.
Yes.
So the new rules are, if you buy a property and the value of the property is less than £500,000, no stamp duty, land tax to pay if it's your first and only property. If it's your second or additional property, then you don't have any stamp duty to pay, but you pay the additional 3% rate. So if somebody's buying a property for £500,000 right now with the new rules, they're going to save £15,000 in stamp duty land tax. It's big. Yeah. Now, once these rules are finished from the 1st of April, and let's say the Chancellor says we're going back to the old rules, then when you buy a property, if it's your first and only property, on the first £125,000, you pay no SDLT, and then it goes up in different tiers. If you are buying a second or additional property, then on the first £125,000, there's no SDLT as well, but you have to pay the additional 3%. And then you pay 3% on every single tier, plus whatever the standard rate for that tier is. So that's very much in like a 90-second nutshell what the new rules are. But there's a big saving to be had. And the good thing is, in the past, when the chancellors changed the rules and they added on most stamp duty, it's applied to property investors only. So people who are buying their own home didn't have to pay the additional stamp duty land tax. So now when he changed the rules to relax them up until the end of March 2021, I anticipated he would say this only applies to people who are buying their own home. But now he's widened it And as he said, this applies to buy-to-let investors. It also applies to you if you have a limited company. So he's opened up to pretty much everybody, which is really good.
Yeah, definitely. So how does BRR, buy, refurb, refinance, get taxed?
So that gets taxed in the sense that depending on how you refurbish your property, did you spend that money on improving it, or did you spend that money on refurbishing it? And that takes us down a very complicated path of, is it a capital expense or is it a revenue expense? And I'm not too sure whether your listeners have come across that or not. A capital expense, generally speaking, you can't claim now. You can claim when you sell the property. A revenue expense is something you can claim in the year. So first you establish that, and you need a really good accountant who understands all of that. That is a complicated and a very much a gray area. So first you establish that to see what your costs are. Once you've refurbished or improved the property, you then put it on rent. And then when the rent comes in, you take off all your expenditure, including your mortgage interest and any other expenditure you might have, insurance, any other potential cost, agent fees, accountant fees, banking fees, and then you pay the tax on the profit. Now, if you have it run it through a limited company, you can claim all the interest. If you have it in your own name and it pushes you into the higher rate of tax, then you can't claim all the interest. But what HMRC or the government do is you get a 20% tax credit. But to keep it really simple for your listeners, is you can only claim half the interest relief, or you get half the benefit. So, but if it's in a limited company, then you claim all the interest.
You answer. I was just to ask you if it was in a limited company, but you just mentioned it. Perfect.
But the real skill is to make sure that when you're doing the renovation, the repair, call it what you like, is to make sure you don't fall foul of something being improved. Because if it's improved, then you can't claim that as a cost. And it is a very complicated and gray area. So you need to get that right. If you get that right, you're okay. Now, of course, as a property investor, they would want to claim everything in the year. Because if they claim in the year, they get the benefit now. But if they have to claim it when they sell it, they might not sell it for the next 20 years. So they've spent money now, but they don't get any tax relief or benefit right now. So you have to get that bit right. But I have, Nana, created a course on BRRR, which is coming out in a couple of weeks' time. So I will let you know when that comes out, and you can share that with your viewers and your followers. It's a paid-for course, but we've kept it at a very, very competitive price because we want to get it out to as many people as we can. So I will let you know when that comes out, and on the first day, we're going to have some special bonuses and a deeply discounted price. So I'll share that with you, and you can share that with your listeners.
Definitely. Thank you very much. When you have improvement, what is improvement? Like, do you have a example maybe that you can share?
Yes. So let's say somebody has a house with some land at the back. They're renovating their house, but they think, okay, at the back now we can extend and build another room. Building that another room, they've improved and enhanced the value of the property. That is not a repair or maintenance cost. Now, so that's one example. Now let's look inside the house. Let's say they've got a kitchen and they take out the kitchen and they replace that with a new kitchen. That would be okay. However, if the kitchen has 6 units, they replace it with 8 units. They can only claim for the 6 units. The other 2 units they're not supposed to claim for because that's an enhancement. Okay, so those are 2 simple examples for you. But obviously, as you know, it gets complicated. People have concrete. People have sometimes lay a new patio, the windows, the roof. Is it a repair? Is it a maintenance? It gets very, very complicated and it's very nitty gritty. And this is why that part, especially that part, is best dealt with an accountant.
Yeah.
And an accountant, Nana, who's done this before many a time.
Yeah, like you.
I'm one of many. There are others out there as well, but you're right. Yes, that's right.
So when should a company get registered for VAT?
Never, if you can help it. Never. So if you're a purely buy-to-let landlord, then you don't have to register for VAT because rental income is an exempt supply for VAT purposes. But what that means is you can't claim back any VAT that you spend money on, which some people want to, but you can't, unfortunately. If you're into serviced accommodation, or if you're into rent to rent and you're charging commission, and if you're a deal sourcer, those types of businesses, then you have to register for VAT when you go over the VAT threshold. But if you're purely a buy-to-let landlord, then there's no responsibility on you to register for VAT, so you don't have to, which is a good thing, by the way.
Yeah, that's a really good thing. Yeah. What should we else, as overseas investors, be concerned with?
So you want to be obviously concerned with the tax rules and how they work. Then, depending on your own situation, to understand what the tax consequences are and which structure to use properly. Above and beyond that, if you're taking money out, to then understand what the tax consequences are and how much tax you might have to pay depending on your income overseas and the UK, to then also understand what other taxes you might have to pay as a direct result apart from income tax when you've got the properties. Then to look at, if you're looking to move to the UK, to look at the rules and see, because different rules kick in at different times. And I think it's better we don't go into that today because it gets really complicated. So they can fully understand those. But the basic one is, what's the best structure for me? And the other one is, if and when I take money out, how much tax am I going to pay, and what I need to declare and when I need to declare it? Because obviously, if you're from Sweden and you don't know anybody in the UK, you got to find an accountant who specializes in property and also knows enough about working with people outside the UK who can help and support you.
Now we come to the fun part. Favorite book, TV series, and movie, Chaz?
Oh, favorite book. That's interesting because my wife only reads fiction and I only read business books. And it's always difficult, Nana, to pin down one particular book, really.
Yeah.
But I'll give you 3 or 4,
Yeah,
which I like, and I hope they will assist and support your listeners and viewers. So, and in no particular order, by the way, a book called Good to Great by Jim Collins. That is an excellent book, in my opinion. Rich Dad, Poor Dad, in terms of mindset, is I think a fantastic book. Think and Grow Rich by Napoleon Hill. I think that's a really good book and helps people focus on the really important traits of being an entrepreneur and a business person. So those 3 are good. Michael Gerber's E-Myth Revisited was also a really good one. Got me thinking about systemization and how to change and improve a business. And a 5th one, so I'm trying to be a bit diverse in terms of business sectors here as well, or different areas of business. I'll give you 2 more. One was Robert Cialdini's book called Influence. That was really good. And I found that exceptionally helpful about mindset. And then Kevin Blanchard's The 1 Minute Manager. So I think I've done 6 or 7 books there, but you and I could sit here for the next 10 minutes and rattle off books. There's so many good ones. It's difficult, you see, because, and I hope this is also going to be helpful to your listeners, because we read a book when we're at a particular stage in our lives.
Yes.
5 years later, we read another book because we're at a different stage. And at
Yes.
that time, 5 years later, that time we read a particular book which is transformational because we're at a particular stage. Now, if I start recommending that book to new entrepreneurs, they might read it and they might not get the same benefit or any benefit because they haven't reached that stage of being at that 5 year pivotal point. So they'll think,
Yes.
I read that book. That was I mean, I don't think any book's a total waste of time, but I exaggerate when I say somebody might say, that was a total waste of time. I got nothing from that book. So I always find it challenging to give people a book because a book has a different profound impact on you depending on where you are in your life cycle of having a business. So when I first read Think and Grow Rich, and when I read it more recently, it had a totally different impact on me. I saw different things in the book. I read and noticed different things in the book. I took away different things in the book. That's because I was at a different stage.
Yeah.
But in saying that, hopefully, most books have some kind of an impact on people. I'll add one more, which I think is really good. It's called The Chimp Paradox.
Okay.
I think that's a really good book too, which people will find helpful. So I always struggle to give one book, and I always struggle to tell people which book it is, depending on their life cycle of their business journey.
And that's some good list. I think I read 4 or 5 of those you mentioned, but I have to read the 2 other ones.
You'll enjoy them.
What about movies then? Do you look at movies, or you're more a book person?
All the time. So I've got 3 young kids. One's the baby in the house. He's only 2.5. The eldest is 13, and the one younger than him is 11.5. So more often than not, Friday night is movie night. So when I think about all the movies I've ever watched, I think quite easily for me, Shawshank Redemption is my favorite movie by far. Nana, I love that movie. I've seen that quite a few times. However, when my eldest was a young baby, I say young baby, a toddler, when he was 3 years old, he made me watch the first Jurassic Park. I kid you not, about 250 times. Every time he would finish, Daddy, Jurassic Park, Daddy. He used to love Jurassic Park. So I've seen that movie more, I think, than most other people in the world. Really, a lot.
And what about TV series or series alone?
I try not to watch them simply because, like most people, I kind of get hooked on them, and
Yes.
then I'm on there all the time. My wife was watching Downton Abbey last night. I try not to get involved at all because otherwise I want to sit there and I want to watch the whole of Games of Thrones and all the other ones. But the one that I have seen and I enjoyed very much was House of Cards.
Okay.
And I enjoyed that because in the introduction I try to stay away from introducing part of my life, which I'm a local councillor, so a politician. But because I'm interested in politics, it was I think I resonated with House of Cards more than most other TV series. So I found that fascinating and interesting. But usually, every time I think about watching a TV series, I'll just start the next book, and I'm never reading one book, Nana. I've always got at least 3 books on the go. I say at least, sometimes it could be 4 or 5 because I could be listening to an audio, but I am reading 3 books at any one time. And the reason why it's 3 is because sometimes I'll get bored with just one book. So yeah. I'll read that, and then I'm thinking, let's skip a few chapters. And I'm the kind of guy who would read the book from the start to the end. I don't like skipping chapters. Then I'll go on to the next book, read a few chapters there, and then I'll come back to this book, or I'll start the third one. So I've usually got 3 books on the go that I'm reading at any one time. So I prefer to read than I do watch a series. The only thing I do watch on TV usually is the news and obviously Friday night movies.
That's perfect. And how can people get in touch with you, the listeners?
So there's a number of ways. If they just want to see or hear a bit more about me, they can go onto YouTube and they type in Shaz Nawaz and property. I've got plenty of videos there for them to look at. If they want to know more about tax, and they're on Facebook, I have a Facebook group called Entrust Property Tax Experts. They should join that group, and I will happily accept them. We are very discerning, so we're very picky about who we allow in the group. We try our best to make sure it's only property investors, so that there's useful contributions and conversations. But if when people join, if they mention, when they're answering one of the three questions, if they just mention your name, Nana, and say, heard you on the podcast with that you did with Nana, then I'll make sure I accept them, because I'll know they are property investors. So they can do that. They can go onto LinkedIn. They can follow me on Instagram, or if they want to contact me, they can go onto my website, which is Entrust, ENTRUST, entrustpropertytax.co.uk, and on there they'll have contact information on how to email me and how to call me by phone.
Yeah, perfect.
And of course, if they want to learn more about tax, then they can buy my book, which is called the Property Investor Tax Guide, which I think you've
yeah, I'm reading it right now. It's really good.
read it. And then if they have a general business, for example, then I've got a book on pricing, which is on Amazon, called the Authority Guide to Pricing. They can read that. And if they have a general business and they're looking to grow it, then the first ever book I wrote, which is called Super Profit. In fact, that's the second book I wrote. It's called Super Profit. Again, it's on Amazon. They can read that. Hopefully they'll get a lot from that, because I've now conducted well over 3,000 business growth consultations. When I wrote the book, I'd done about around about 2,000, 2,500, something like that. So I tried to share as much as I could in that book in terms of what I think helps grow a business. And then finally, sorry about this. This comes about as a bit of a Shaz show in terms of, have all this stuff here, but I try and put as much effort as I can to share stuff with people. So I've got a new book coming out, Nana, on the 24th of September, which is called The Entrepreneur's Cookbook. And this is where I share certain business recipes with people, which will help them get key ingredients to become successful in the world of business.
Okay.
And that's coming out on the 24th of September this year.
I thought it was about cooking. I'm like, oh, he's doing cookbook. But that's
my wife keeps me well away from the kitchen. Okay, so yeah, stay away from the kitchen, because every time I go in there, I just make a mess.
You just do the finance and she do the cooking. It's good. You separate.
She's so much better. I don't think anybody can eat my food apart from me, and I force myself because I've cooked it. She keeps me away from the kitchen. There's no, your food's not edible.
Okay, listeners. So there you have everything. Join the Facebook group. Buy his books, because Chaz is an amazing person and he knows his stuff. And follow him. So by that, I have to say, don't be stressed. Invest, people. Bye.